Hey guys, don't forget to subscribe and hit the notification bell for more. Hey everybody, it's Kevin from NorthStarBadChance.com, of course, and I'm here to talk to you about cryptocurrencies and precious metals. And in particular, I'm here to talk to you about gold and Bitcoin, because there's one particular chart that I've been keeping a close eye on over the last few, well, months really, I suppose, in particular throughout the course of this year. And it's really given us an excellent heads up as to what is going on in the market. So I'm going to show you the chart and we're going to talk about it. Please, please don't get upset. Please don't let emotions overtake your thoughts here, because as a trader or an investor, if you let your emotions take over your decisions, then you're instantly setting yourself up for a problem. Emotions equate to bias, okay? So we use technical chart trading to completely eliminate any possible bias. I am not biased towards gold. I'm not biased towards stock markets. I'm not biased towards cryptocurrencies or Bitcoin. I simply observe the chart and report the evidence. I'm a scientist by trade, and I've spent my entire career analyzing data. So please trust me when I say to you that I'm not here to put across a narrative. I'm not here to sell a story. I'm here to just simply present you with the evidence and allow you to make your own informed decision based on what I'm about to show you. Okay, so I'm going to share my screen. If you give me a moment just to do that for you, and put the screen sharing on. Here we go. That's the screen shared. And I'm going to turn the video camera off just to remove any distractions there. Okay. Right, so this is the Bitcoin to gold ratio. And if you're not used to looking at technical charts, then this might look quite complicated. So I'm going to talk you through it so that within a few minutes, you'll have a very clear understanding of what this chart is showing. So this chart, as I said, it's the Bitcoin to gold ratio. So what it means is that it's measuring Bitcoin versus gold. And when the ratio goes upwards, it means that Bitcoin is outperforming gold. And when the ratio comes down, it means that gold is outperforming Bitcoin. So you can see very clearly there on this chart, there are three cycles. First cycle here, made up of a downtrend and then an uptrend that broke out, and then another cycle that consisted of a downtrend and an uptrend that broke out to the upside. And then cycle number three, which consists of a downtrend and an uptrend, which as of yet has not broken out. Now, very often we're used to seeing charts where Bitcoin is measured in US dollars, but US dollars are affected by currency fluctuations, affected by US economic policy, affected by interest rates, affected by relative strength with other currencies, and by, in short, inflation. Now, gold, of course, factors inflation into account because gold tracks loss of purchasing power. And a good example of that is that a house today will cost you the same number of gold coins that it cost you 50 years ago. There has been no inflation with gold. Gold is not inflated out of existence like it is, like US dollars are. Gold tracks that loss of purchasing power. Okay, so as everything else goes up, so does gold. So gold is tracking that loss of purchasing power. So it makes a lot more sense to measure other assets, other instruments against gold, because gold is more constant than the US dollar. The US dollar has lost, I lose track, but maybe 97% of its purchasing power since introduction. Gold has lost 0% of its purchasing power since introduction. Okay, so that's the explanation as to why I'm comparing Bitcoin to gold. Gold is the constant monetary standard, okay, that everything should be measured against. So measuring Bitcoin against gold, you can see clearly when Bitcoin enters a bull market, it breaks out versus gold and off it goes, huge bull market. This was the Bitcoin bull market here, where it broke out and Bitcoin rose by a huge a huge percentage. And then again, when Bitcoin broke out, you had a little bit of a back test here in 2020, and then Bitcoin catapulted off into a huge bull market. Now, things to notice here are that the period of time from the cycle high to the point that it breaks out the next time is 161 weeks. This is a weekly chart. Cycle number 2, from the peak to the point of breakout, was 161 weeks. Cycle number 3, where we are now, well, we're already at 168 weeks. Sorry, I beg your pardon, that label's wrong. It's now 175 weeks. 175 weeks, which is a lot longer than the previous cycles from peak to breakout. So something different is going on in this cycle. And if you look down at the bottom, we've got the MACD indicator, the moving average convergence divergence indicator. It's a trend following indicator. And you can see that the MACD indicator was very low at the point where it broke out in 2017. So it had a lot of fuel in the tank to move up. And when the MACD wires crossed, when the blue line crossed the orange line, we entered a bear market. Okay, fast forward to the next point at where Bitcoin broke out versus gold in 2021. The MACD indicator was relatively low. Okay, it was as high as it had peaked on the previous point here, but it was still, in the general scheme of things, still relatively low and had a lot of fuel in the tank to rise to the upside, which is exactly what it did. And it rose, and then you got the wire cross, the blue line crossing below the orange line, and we entered a bear market versus gold, and it failed to make a new high versus gold. This is where where Bitcoin made a nominal new high in US dollars, but it failed to make a new high priced in gold. So it continued the bear market, and the bear market continued until it broke out. And then fast forward to where we are now, and back in March, I highlighted that the MACD indicator was not low. Okay, it wasn't low. Previously, it was low here when we broke out, and it was very low here when we broke out. But here, when we were trying to break out, the MACD indicator was not low. So what I was trying to say was that there may not be much fuel in the tank. There might not be much energy for Bitcoin to break out versus gold. If Bitcoin doesn't break out versus gold, there is no Bitcoin bull market. It has to break out versus gold. That's my thesis. That's what I'm suggesting. Now, if we go and look at what's happening a little bit more closely, this pattern you could view as a cup and handle pattern. Okay, so you could draw a cup on this. You'll have seen me do this many, many times in the past. Each of these cycles is characterized by a cup pattern. You can draw these classic technical chart patterns on all of the cycles, just like this. And the previous one as well was a cup pattern. Okay, so Bitcoin has a very, very good track history of forming cup and, well, I was going to say forming cup and handle patterns, but you'll notice in cycle 1, it formed a cup, but no handle. It just took off. Cycle 2, it formed a cup, but no handle. It just took off. Cycle number 3 is different. So do not let anyone tell you that this cycle is the same as all the others. It's not. It is different this time. So what could be happening is that we could be forming a cup and handle pattern like this. And that is a very bullish chart pattern if it plays out. Okay, so you can see a very nice candle forming here where the ratio came down and touched the bottom line and reacted very strongly from it to the upside. So what we can say here is that if this ratio breaks out above this upper red line, then it's very bullish. It's a valid cup and handle pattern that would likely lead into a significant upside move for Bitcoin and a Bitcoin bull run, probably to well beyond $100,000. And as I say, probably well beyond that. So that is the bullish scenario. We have to keep an eye on this though, because if we break below some key horizontal support, which I can put on the chart for you sort of around about here, if we were to break below that and close below that, and at the same time, if this MACD indicator was to cross below the 0 line, as it did back in 2022, you can see we broke below this support line and we broke below the 0 line, then that would make it highly likely that this is not a cup and handle pattern and that we are entering a new bear market, which may form another cup pattern that looks, I don't know, it could be something like that, or it could be something like that. We just don't know yet how that would play out. But there could very well be another extended period of Bitcoin bear market, that we're heading into now. So it all hinges on how this potential handle plays out. We have the support line, we have the resistance line, we have the MACD indicator, and we also have other technical evidence as well. So putting all that weight of evidence together, at the moment, it's a coin flip as to whether this is a cup and handle pattern or not. But we will know pretty soon, looking at this MACD indicator, because if it dips below 0 as we move into September, then we've got some serious problems for Bitcoin, and all of the theories around Bitcoin moving much higher get blown out of the water if that happens, at least in the short term. And if gold breaks out versus Bitcoin, so if we flip this chart the other way up and invert the scale, if gold breaks out versus Bitcoin, so if this chart doesn't move in that direction, but if it moves in that direction, then it means that gold is outperforming Bitcoin, and it means that the Bitcoin bull run is not going to happen. I'll turn the chart the right way up again. So it's very clear to me what needs to happen. And that's the whole point about technical chart analysis. It's not that at all times we know exactly what's going to happen. That's not true. It just means that at all times we know where the support and resistance lines are. And when price crosses them, we can respond to that evidence, just as we would have done here, just as we did here, just as you do when it breaks down. It allows you to step aside when the evidence is strong that there's a bear market developing, and it allows you to enter the trade with a high degree of confidence when the evidence is strong that you're entering a bull market. And there's no need to front run the evidence by following narratives, because narratives are not always correct, because there are a lot of conflicting narratives for one thing. So that's the evidence from this chart. This is the Bitcoin versus gold chart. It's, as I say, slightly different from Bitcoin versus the US dollar. It gives a slightly different perspective and a slightly different slant on things, primarily because, as I said, Bitcoin did not make a new high versus gold. Bitcoin is actually trading at a lower value versus gold than it was more than 3 years ago. So Bitcoin's got more work to do to recover that lost ground. Okay, that's it from me for now. Please take that in the manner that it was intended, which is just me giving you information that I hope you find useful. I'm not trying to cause any upset amongst Bitcoin fans. I'm not trying to cause any upset amongst gold fans. I'm just trying my best to present the unbiased technical evidence. Please just take it in that manner. Thanks for watching and listening, and speak to you all again very soon. Bye-bye for now.